One thing that we have known since the beginning of this pandemic is that there were going to be a lot of businesses that were not going to return to come back to business as usual. So there are some businesses that are filing for bankruptcy, and it's sad to say one of these businesses are one of my favorite car rental places, Hertz Car Rental Company files for bankruptcy, and in that news, their stock is actually went down 40%. Another thing in the news is that Mark Zuckerberg led Facebook to its all-time high this week, and they're up. Facebook is up 1.5% more than what it was at the beginning of the week. Trump considers forming panel to review complaints of airline bias. Also in the news, a huge pension bought up Microsoft, Alibaba, Alibaba, and 3M stock. Those are some pretty good stocks to buy, but to buy up that stock, they had to sell out of some stocks that they were holding. Um, GMOs been anchor on why stocks are too risky. Right now, it is very risky because a lot of the movement of our economy is it's it's basically based on the the livelihood of the people um, that are highly consumers of the product of the businesses that are producing some of the products that we use every day. And with the height of the pandemic, even though it's we've seen some flattening with states opening up a little bit of uh, social freedoms a little at a time. Um, Investors and economists are seeing how that plays out, and if any more changes to our everyday life will occur, like will the death toll rise, or will it pretty much stay the same? Um, for the last 2 weeks, I know it's been about just in our nation, it was around 2,000, 1,800 people that were dying every day due to COVID 19, and that is a lot of deaths every day. So it's a lot of things to consider. The the market has never been predictable, but we know that there's compound interest that is rewarding when we do invest in the market. So it's a weird time. It's a weird market, but it is time to go active. Um, where's Starbucks? Dunkin' and Starbucks are missing out on breakfast. Expect those customers to venture back. So I'm about to start getting into Starbucks and Dunkin'. Um, my goal for June is to start a weekly stash away to do monthly buys. So I'm gonna get into that a little bit more next week uh, on the 29th, the last day of the market month. Go over my goals for May and did I hit those goals and what are my expectations for June. Correction to Disney workers on furlough. Yeah, automakers trade back U.S. on efforts to weaken fuel. efficiency. Um, Around this time of year is around the time that we start to see the gas prices go up. Um, but gold stock is still up. So even if gas prices start to go up, I don't think the oil stock will go up until maybe after the summer. Um, Twitter, WhatsApp, sanctions loom, and European privacy crackdown. We know that most of the apps that are free applications on our devices, and their policy clause is the right for them to sell our information, and in having that right, um, they also turn on listening mechanisms to listen to our interests along with our so it hasn't been private. So a lot of nations want to crack down on privacy. I think the best nation to do it, sad to say, is Cuba. Best nation on cracking down on privacy. Day trading has replaced sports betting as America's pastime. I can't support the stock market forever. So I put out a post on Facebook on my personal page, and I said it was one day I was speaking with a friend that I went to school with, and we actually lived in the same neighborhood. I said, "Man, why does day trading feel like gambling?" And he agreed because he day trades as well, and he's been doing it for a while, and he uses different platforms. And he says when he feels like that, that's when he knows he needs to take a break because it's not supposed to feel like gambling. Um, it's supposed to feel like investing. You taking ownership of companies by buying shares with your money. That's what investing is when it comes to buying shares on these platforms that we agree to participate in the stock market. Read some more. Alibaba post posted earnings beat thanks to steady recovery since March. So they have been on a steady recovery since March over across seas in Asia, but Alibaba is currently down 6% as of yesterday at the close of market. Coronavirus. China retail giant Alibaba sees recovery after virus. So they are starting to recover. Um, Wonder what their stock is. Let's see what Baba's stock is right now. So their stock is currently at 199.22 cents. Um, let's see what their 52-week high. So their 52-week high is 231.14 cents. So what's a good time or good price to buy Alibaba? So if their weekly high is 231.14, and we multiply, let's say, zero point 0.3, which would be 30%. We take 69.34. We're going to take 69.34 231. $69.34 away from 231.14. It equals 161.80. So a good buy for Alibaba will be around 161.80. So when was the last time that Alibaba was at 161 and around 80 cents? Wouldn't be a week ago. Let's check a month ago. Would it be a month ago? Nope, wouldn't be a month ago. Let's check 3 months ago. 3 months ago, this is when everything started to slow down and panic started. So it looks like the best time to purchase Alibaba would have been March 23rd. Just to give some range, good time to purchase Alibaba would have been between, I want to say March 12th, and I'll take it to here. March 12th and May the 4th. May the 4th, even though it was pretty high, it still would have been a good buy around 180, in my opinion. We look at the year, of course. Also last year, between May 28th and we'll go to November. So anytime between May and November would have been a good time to buy as well. But that is in 2019. As of this year, good time to buy would have been March 23rd, 2020. So it's slowly going to work its way back up to the 230 mark. So we still have a chance to get in, but right now where it's currently at 199, that is too high to get in. Too high to get in, and it's down 6% for the week. So even though tech has been what's basically been pulling us through when it comes to the stock market, when it comes to the Dow Jones and the S&P 500, the Nasdaq, the stocks that have been carrying us through, so we don't have a total economic collapse, has been tech. And each one of these tech ventures, they do have cloud services, but not every cloud stock has soared. And it gives an example of Apple going up more than half of a percentage, but DXB going down almost 1.5%. DXB is Dropbox. With Dropbox being a place that you can go and actually pick up visible copies of DVDs. There was a time I think they even had CDs, but not anymore. It's almost dead. I don't see this company being around the next 10 years unless they change their platform solely to digital downloads. I know they do have a digital download platform because they do have a cloud service, but they're not as popular as the ones out in front like Apple, Netflix, Hulu. I mean, even the three major networks in TV, they actually have their own access for digital downloads. That's not on uh, their network that they show that they broadcast on regular television. They leave the special things for digital access with the paid subscription. Um, but if Dropbox doesn't come up with some ideas soon, this could be one of the very businesses that help put Blockbuster out of business. This company may be in danger. Won't be won't be before you long. Home Depot, Moderna, Walmart stocks that define the week. Starbucks went down, of course. Facebook went up. Baba's down. Disney is up about a quarter of a percentage. Um, when it comes to automakers, if automakers invested in more tech, they will continue to go up. But as far as these, I like to think of them as brick and mortar uh, auto companies like Ford. Ford, we got Dodge, um, we got Chrysler, and we used to have Pontiac, but you still see them around, but don't see them that much anymore. When it comes to these automakers, if they don't involve tech, we see a lot of tech companies that are getting involved with creating their own auto content, and a lot of people don't know that they're not actual auto companies. They're actually tech companies that are coming out with automobiles. If the brick and mortar automakers don't adapt to modern technology or get ahead of the futuristic technology, they may die as well, or just may just get bought out by these tech companies and just surrender to them. Netflix is down more than 1.5%. What they started out for the week. Um, Netflix is on hunt for zombie accounts, so they're trying to cut the cut the cord on where they're losing money at. Um, Stocks make the biggest moves midday, and I've always was when I first started investing into the stock market, I was told to have a morning plan, a midday plan, and a end of market day plan on watching the fluctuations, the movements of certain companies, and when do they move the best. Um, I'm a morning person, so I like to make my moves in the morning, but I also had to uh, come up with a plan where if I was scheduled to do other things in the morning, what can I do in the afternoon? So there are a list of stocks that tend to have more movement uh, in the midday. And when I say midday, I'm talking 10:30 to 1:30 midday. The best movement in the morning, I saw that it was 9:30 when the morning bell rung, all the way to 11:30. So around 12 o'clock, it slowed down. But most stocks that had their midday run, they didn't start running until 10:30, and they kind of started to slow down around 1:30. So there are companies where they have their strongest movement, whether it's on the up or on the down in the midday. And my last one: do you want to work from home post pandemic? Will you be forced into a pay cut? So it's a lot of fears that we have, or that we have had since the pandemic started. I mean, the the filing for unemployment, I think it reached 33.5 million U.S. citizens that have filed unemployment since the beginning of March, and daily it's climbing. And even when things are starting to get to what may be the new normal, business and the way that we handle business as we know it, it's going to change. Of course, it always planned to change, but the way that it's being forced to change, it's uh, it's scary because it's different. So, in saying that, I'm gonna wrap it up here. I'll see you guys Monday. I'll try to get in. Monday, it'll be around 12:30 when I come in. Uh, I, well, not Monday, Tuesday, because Monday's the holiday. We're off this for the holiday. But Tuesday, I'll come in around 12:30. Um, it's normally not a lot of movement starting out coming back from the holiday, so I'm gonna do a lot of reading before I jump into anything. Still down. I'm down 97%. So the goal that I had for the month of May is not going to get hit. I do plan on reassessing and coming up with a new goal to target, and that's what I'm gonna be working on. And I'm also looking into the fractional shares. Um, know what that looks like on M1, but as far as Robinhood, I haven't considered. I have considered doing fractional shares with Robinhood, and I wonder if it's going to look similar to M1 Finance. M1 Finance looks like this. Well, as soon as it logs in, yeah, I'll show you guys. But it looks like it's looked like a circle, and in that circle, it breaks it up into a pie to where I got 3% going to like PNC Bank, 10% going to Apple. Um, I have an AT&T phone, so I chose to go with AT&T, uh, doing fractional shares. And it's taking a while to come up. So yeah, I chose AT&T, PNC Bank. I had Amazon on there, but Amazon doing fractional shares, I didn't think it worked out for me. I was actually looking for companies that had around the 3% uh, dividend yield, that I could invest in companies, and then each month or every quarter, however they pay their dividends, they would give me a percentage of the amount of stocks that I owed in their company. They would pay me a dividend yield, and I think I started out with like $15, and I added to that $15 every once in a while. But I ended up, when I got to about 200 bucks, that's when It was around May. No, not May. It was around the beginning of March, the end of February that I sold $200 that I had in that portfolio, and I kept $25 in the account. And since I kept $25 in that account since February, with the dividend yield, I have grown the $25 that I had in that account. Now it's at $41. So this is what the fractional shares look like on M1 Finance. I'm gonna try to do this on Robinhood to see if it's something similar. So I have some medium bonds, and actually got this set up to, yeah, auto invest. Got it set up to auto invest. So any cash that I get in the dividends monthly or quarterly, I got it set up to where it just reinvest those funds. So I have medium TB bonds. I got bank balance sheets that I'll purchase. Uh, JP Morgan, they're actually down, but I got a few dollars in that. Of course, Apple, PNC Bank, and then AT&T. I had Amazon on here, but I took them off because I think I did like a test for 6 months, and then all 6 of those months they ended up losing money because they were making money as an individual stock, but as for a stock that would pay you a dividend, um, they wasn't so profitable in doing that for me because I didn't have enough invested into their stock. I didn't have enough invested to um, buy one share of stock of Amazon. So since I didn't have that, the mathematics didn't work out for me to have a yield. So I'm gonna see if I could do that with Robinhood, and do the fractional shares, starting with a little as a dollar. I'm gonna start out with about $15 or $25 to see how that works out, and then continue to have a buy plan when it comes to owning shares of companies. So that's my time for today. You guys enjoy your weekend, and I'll see you guys Tuesday. Be safe, and remember to care for the ones that you love and to love the ones that you care about. Prepare yourself. Prepare yourself for money.
Yeah, this